From New York, we have Bob Yawger. He's the Director of Energy Futures at Mizuho Americas. And of course, we are going to take a look at what's going on with oil. Bob, it is great to see you on the TD Ameritrade Network. Nice change here. Interesting, despite the tensions that we're seeing in Iran, oil's not really reacting that much.
No, it's not. We had a lot of Iran headlines last week. We had drone headlines, we had shipping headlines, and the market was still down over 7% last week. So the MO tended to be the day starts strongly in the green. Several days last week, it was up more than 1% early in the morning. And then the market, once we get underway, for size, tends to trade lower, and we're seeing that phenomenon kick in again today. We were up over 2% earlier in the morning here, and now we are up 0.4%. We have slid over 1.5% here so far this morning. Still in the green by 22 ticks, but sliding towards the negative level.
Why can't oil get a bid? Does it go back to the demand issues that we're seeing, and there's just so much supply in the market?
Yeah, it's still a double whammy. It's not good here. You had the OPEC, IEA, and EIA monthly reports this past cycle, all warning about demand destruction, negative in its own right. However, the supply situation is also rather grim. Crude oil at the weekly EIA storage reports is 45 million barrels above last year levels, so significant amount for the middle of summer. Worse yet, last week's EIA report, gasoline was a positive 3.6 million. That implies nobody's driving, and you have to stick 3.6 million barrels into storage as a result. You should never get a positive number in the summertime when peak gasoline demand season is underway, and you certainly shouldn't get a pretty big number like 3.6 million barrels. So that also cast a pretty dark shadow on the market there last week.
So what are the ranges that you're looking at in the short term and also longer term here? Because it seems to be, I mean, the past 3 years I've been meeting with you, that $50 to $60 range kind of is what we come back to.
Yes, and as it does seem to be the case since we have met. And I'll stick with that for now. The low here in this little wave that we put in last week is just a little bit below $55. So I think that's going to be the next level. We need to hold on to that. 54.72 is exactly the number. The speculative position last week, the CFTC report put out that, incredibly to me, considering that we slid 7% last week, but the speculative community apparently trying to pick the bottom here, they loaded up 41,000 times, or that spec position was up about 25% last week. I'm guessing that against 55, well, to be 54.71 to be exact, they would tend to give up on that long position at that point. So that's another reason to be bearish if we do trade down that low. When they flee the scene, it's going to leave its footprint on the market here. The market will trade lower. So that's going to be very important. Again, $50, we've held twice in the month of June. That's going to be a huge number. Always because of the whole number, but also because there's a double low there from June. So very important technical number in front of $50. I mean, I would tend to think that there's enough gasoline demand in the balance of the summer to support $50. If not, that would be a very grim level to be taking out. Anything below that during peak driving season is not good at all.
I mean, are Americans just simply not traveling as much?
We had some weather situations that killed demand and basically added to supply. And also between the trade war and concerns about the economy, global economy, yes, the Americans do appear to be driving less. You wouldn't know it by driving down the turnpike in New Jersey on a Friday afternoon, but yes, it does seem to be the case. We have consistently had weak demand numbers in the EIA weekly report, and yes, it's if you don't need the gasoline, you don't need the crude oil to make the gasoline. So that's the circle of life for the energy complex.
Are there any scheduled turnarounds coming up that you're looking at, the other outliers outside of supply and demand?
Well, there are, and there will be, because we're going to wrap up summer here in about 6 weeks, and then you'll have some refiners start to come off. We're loaded up on the refinery utilization rate. Really can't go much higher. We're up around 95%. That's really high. You can't really sustain that forever. I should just have refiners will go down accidentally. But very interesting development this morning here, just a couple minutes ago at 9 o'clock. The Philadelphia Energy Services, Philadelphia refinery, it took crude oil this apparently rather recently. All word around the energy sector was that refinery, which had blown up basically a couple weeks ago, was on fire. Very high publicized fire. It's within vision of you can see it from Philadelphia. They're going to try and get that up and keep it running. The whole word around the campfire was that was down and staying down, and that was going to be retired. They couldn't sell it, couldn't find anybody to take it. It is a big refinery, but apparently they've taken some crude oil delivery. That means they're going to try and keep that thing running. I'm not sure what the reason is as of yet, but when that came online here, when I hit tape, gasoline traded to a negative territory, and it's down about half a percentage point here now, which brings us back to that same equation. If you don't need crude oil to make gasoline, then you're not going to need the crude oil. So it's implying here that with those barrels coming in from PES, you may have a significantly oversupplied gasoline situation here on the East Coast.
Right. I thought they had to retire that refinery, though. Not only was it aging out, but there was whatever chemical is required. I can't remember the name of it. Whatever chemical is required to refine the crude to get to the finished product was destroyed.
I agree with you. I was really surprised to see this that headline hit the tape, and everybody I'm talking to is showing the same degree of amazement at that. That thing was on its deathbed, and it looks like I'm going to guess, I don't know this at all, but the only reason you try and bring that back, keep it at running at low levels, is because somebody might have some kind of interest in buying it or taking it over. So I would tend to believe that's the case. I was under the impression that was not the case, and that everybody had passed. But yeah, that's one of the headlines of the day here. Came on, hit the tape at about 9 o'clock this morning.
All right, Bob. Always great to speak with you. Thanks so much for joining me.
Thank you, Jill. Have a good day.